What's up, guys? Um, had a good trade this morning. Now we're looking at the PM session. So I want to draw your attention to the dollar. If we look in the top left corner, the hourly, the 4 hour. So this is that fair value gap we were talking about, and you can see we're having trouble closing a candle body in the top quarter, which we like. There was an aggressive spike up, and now we're dropping. I'm curious as to what that spike was due for, but I think it might have just been, let me move this. We have this daily fair value gap right here, very small. So I'm wondering if we wanted to go visit that one more time before going lower again. I definitely think we'll need to see a close above that. So here it is on the 4 hour, on the daily, and then above. And if we close above that on the daily, it'll also be a close in the top quarter of this 4 hour civvy. So I think we'll go higher after that, but we seem to be respecting it. And I think the dollar, if you're looking at the 4 hour and the 1 hour, it looks like we're going to see lower prices. You can see we made this high, low, lower high. And then when we came down and broke the structure, taking out these even highs on the dollar hourly, when we came up off of that, I would have wanted to, and we shifted structure here. I would have expected a close, but since we didn't close and it's turned into a wick, I think we're going to continue down. But that's something to watch going into the afternoon. So when we're looking at this yellow line in the background, know that if it's going up, we're actually closing above this high. If it's going down, we're actually looking for more downside. Traded NASDAQ this morning, and there was a really big decoupling in the difference between ES and NASDAQ. If you look at the highs, it was pretty bad. So we were able to walk away with the 2022 model, but then I just left it at that. Makes sense because Powell's speaking at 2. I feel like yesterday, what did he speak? He spoke in the morning yesterday, and the morning liquidity was actually, or the morning price was actually a lot better than the afternoon price. So I'm gonna just understand the environment you're stepping into. If he's speaking at 2, they can manipulate this market in any way they want. I think I'm willing to sit here, and I'm comfortable enough with my setups where I'm willing to take something if I have a certain level of confidence in it, and just make sure you use a stop loss. It all depends on how price moving well, is the setup well, things like that. If you look at NASDAQ, we made this higher high going into lunch, and then this aggressive drop as the dollar ran up. So if the dollar starts to drop, we could see more upside. I think if you look at the 1 hour and the 4 hour, it looks pretty, we're really wicking. If you notice this mean threshold, this is the mean threshold of this hourly wick. We came down to it so perfectly. You can see wicking right over it, candle body's respecting it, but I have a feeling that we want to see this daily fair value gap before going higher. You can see it's made up by this low. I think this afternoon session will either tell whether we're going to do that or not. On ES, it is looking a little heavier because ES never made some of those higher highs that NASDAQ did, but it did sweep this, wait, let me double check that. It didn't sweep. So it didn't sweep that liquidity at 1150. So that's something to be worrisome of, but we did sweep this general buy side. That was Wednesday. So ES is looking a lot heavier to the downside. There's no fair value, or I guess the daily fair value gap is this, but I don't think that lines up with the NASDAQ one. They're not really the same, because this is that low that's on NASDAQ. Well, actually, no, never mind. Oh, no. Yeah, this low is the top of the fair value gap on NASDAQ. So it's the same sell side liquidity, but ES doesn't have that fair value gap there. Going to the 15-minute. So the higher time frames look kind of bullish, like the 4, but the 15-minute, I feel like it wants this sell side, especially on NASDAQ. So on ES 5-minute, if this is where the price run started up here, and we draw the fib to our target, we have this 50% level. So on the 1-minute, I think I could see us coming up, cleaning out these highs right here, and then sending it lower. You can see we really respected this fair value gap. We respected that fair value gap. I would need to see price above this high before I think it's going to the upside. Above this high, that's an intermediate term high. Above that high. But I do like, even on the 5-minute, you have this order block structure, which is, and then this 1-minute inefficiency right here is just the top end of this 5-minute inefficiency. So I could see it running up there, tapping into that, tapping into this order block just to send it lower. If you look at NASDAQ, it kind of did something similar. We have the order block, we have the 5-minute inefficiency. It came all the way up to that third. So that's this example that I've been talking about lately now that I've been trading NASDAQ more. NASDAQ, if you can see, retraced a little higher, came a little closer to that high than ES did. NASDAQ came into that second fair value gap, whereas ES only stayed at this first one. And that's kind of goes back to something I've been saying about how, like, on ES, I would have expected this to be a breakaway gap, and my trouble lately with narrating the NASDAQ price swings, but I think I'm getting better at it now that I'm watching it a little more. I like how on the 5-minute, you can see the candle bodies respected consequent encroachment of this opening range gap. And if you label this the start of the price run and measure down to that liquidity, we've already spent time in the premium up here, a lot of time over that 50% level. So it's interesting. It's looking possible. Price is looking good. Again, I'm hesitant just because Powell is speaking. So we already walked away. We're green on the day right now. There's no need to push buttons. We have tomorrow too. Tomorrow with just consumer sentiment at 10 a.m. So that's not like anything crazy. I will be doing a market recap and after market. This morning, I thought, we had the pretty good trade 2022 entry model. We had too much SMT between ES and NASDAQ. It was kind of decoupled. I labeled out some silver bullets, but I'm going to kind of talk about in the market recap why, I don't think this was good trading. I saw a few people on trading Twitter calling out these levels, and it's in hindsight, it's kind of one of the reasons why I think the lives can be very valuable. In hindsight, I can mark all this stuff up too. But in trading, how many confluences do you have when you're trading it live? How many confluences do you have? Something I noticed about this morning and just not speaking was how easy it is for me to how relaxed it is to enter trades when I'm not narrating them. Because that one, we had that one wick into it, and I was just like, oh, yeah, entry. But when I have to narrate what I'm doing, it does make me hesitate a little bit. I'm hoping that we can, and I feel like that's why anyway, I'll get used to it. I'll get used to the speaking out loud, hopefully. You can see here on NASDAQ, we came down to, the mean threshold. I think I kind of wanted to trade ES just because ES did look good. I don't know. We've been doing NASDAQ, so I'll stick to the NASDAQ. Kind of got that flow going. So as you can see, we're below this opening range gap. I could see a little bit of a retracement. I think this high needs one more swing high to the right of it for it to be an intermediate term high, and then go lower. I like that fair value gap. I just feel like we cleaned up so much buy side liquidity. We generated so much of it here. Cleaned it up. Now we're gonna go lower. And then if we were to rally up and get above this high, I think that's what would change my narrative to from downside to upside. coming up into these order blocks right here with this swing high. Yeah, might just run for it now. We're gonna wait. We're gonna want a lot of confluences, things to line up. I'm not just gonna short the next fair value gap. Even though, you know, it could deliver, but I think especially in like the opening 2 to 3 minutes of when, like, if Powell's speaking at 2, doing an entry on like the opening 2 minutes is like the most risky. But I mean, this could have been it right here. Silver bullet. I'm okay with missing that. Dollar rising. Yeah, if Powell wasn't speaking, I probably would have taken that. And ES, like after like 10, ES and NASDAQ just became so decoupled. Like you can see this higher high that NASDAQ made and ES did not. ES was so much heavier. We're gonna see if ES took that liquidity. ES did. Double check that. That low. Yeah, so this is that low on NASDAQ that we had that red line on. You can see that same low on the S&P has been taken. So that's something you want to know. Something really important to keep your eye on. Because if we start reversing, it gives a lot of context. I'm watching the dollar still. Looks like it's about to come up and take this high. So the dollar looks like it's about to go and make a higher high. Very bearish. I'll label that the silver bullet. Just the two, I think that was a good setup and everything. Just I wouldn't have wanted to put on risk right at 2, knowing Powell is speaking right at 2. Okay, so now we're crossing over on NASDAQ. Let's see. I don't know. That would have been the setup to the downside. I think that would have been the easiest setup to the downside. So I'd say let's hold off. If we ran aggressively over these highs, like it was like a V bounce, I would like longs after both indices taking that sell side. If the dollar started dropping heavy and they started pumping, I would like longs, but a lot would have to happen for that. I could see a short scenario where we kind of like come back up into this and like take a lot of wicks into it, and I'd be like, okay, we'll target the sell side again. That sell side was like the most obvious draw. So now that we took the draw, just wait for more information. looks like the dollar made an equal high. I want to see if it wants to turn lower or break above, continue making higher highs. As you can see, this was that silver bullet on ES. Nice confluence of being under the new week opening gap. But look at these. I feel like these are pretty clean in terms of buy side. And then ES, you know, that 1155 high, never got it. ES is really close to this. Its daily fair value gap, so maybe it'll do one more run down there. Yeah, we have some sell side down there. I could see that happening. I wouldn't want to really trade to it. I think we would need more handles of probability. Again, remember this. So one of the rules for the silver bullet is ES needs at least 10 handles. NASDAQ needs at least 20. You know. Yeah, so dollar's going up, taking those two highs. I could see NASDAQ possibly run into that mean threshold. So I guess that would be more than 20. That would be 40. I mean 20. Yeah. But I'm going to be a little more patient. Dollar continuing higher. Looking strong. So more downside for now. I think how we take this low will be important. Do we wick below it again, or does it show like go through it with force. I'd want it to go through it with force. If we start wicking below it, that'd be concerning to me. You can see right here, this retracement came right up for that consequent encroachment of that wick. Love to see that. Dollar is aggressively going higher. Let's see how this candle closes. I think ES, I think what's really happened is ES is dipping down into that. It's daily, that's the Dow. It's daily fair value gap. Wants it. Yeah, even if you look on the hourly, see how much work we've put into buy side, buy side, buy side, buy side. I have a decent amount of friends visiting. That's why I wasn't on this morning vocally. So if you hear a bunch of people in the background, it's what you hear. They're up for the weekend. Yeah, so that was definitely silver bullet entry. Just gonna keep saying that because just waiting. Yeah, I don't want to go short. Just to reiterate, I don't want to go short because this would have been the liquidity that I would have been most confident in targeting. And we've reached that. So I'm just waiting. I mean, there could be a buy side possibility because remember on the like higher time frame, like the daily, we're targeting this. So if we wanted to like swing or even expand our like this fair value gap right here could be a great entry for the context on this like 4 hour. So what I want to see is, I want to see us enter it, let that be the narrative. I want to see, you know, a shift in market structure on the lower time frame to build. And that's the narrative for that. I'm gonna look at the dollar real quick though. The problem with that narrative is we need the dollar to drop, and the dollar isn't looking too willing to do that. Again, focusing on whether the 4-hour closes in this upper quadrant, so it might not. Could just be a 3 drives pattern here, and that's going to turn into a wick, and then it'll give up the ghost and take out that low. But that 4-hour candle closes, we have a while. So but yeah, notice how once we took this low, it didn't want to continue much further. I'm liking this idea of we're just entering into a deep discount, cleaning up sell side before taking this higher time frame buy side. So I'm not going to start getting interested until the 1 minute breaks above this high. And then I'm not going to start getting real serious until we see some displacement on the 5 minute. So it's kind of rough on the 5 minute. If you see, this is our next swing high. And while we could wait until that gets broken, I would like to find an entry before that, because I'd be targeting the high of the day, and an entry before that under the 50%. Under the 50% is before that high. So it's not like we have a swing high on the 5 minute that we can look for a close swing high and like wait for that market structure shift. And I usually don't like entering unless we get a market structure shift on the 5 minute, but I think with this higher time frame narrative, we do have it on our sides. Just saw a tweet on Twitter. Jerome Powell, quote, just closed the fucking door after climate protesters interrupt his speech again a couple minutes ago. I don't know if any of you saw the videos, but like he spoke a few weeks ago and climate protesters came in, and there was a video of it, and they were just causing a ruckus. And I guess they're back. That's kind of funny. Let the poor man do his job. Got like one of the hardest jobs in the entire country right now. Okay. Like this. For longs. I want to watch how we start. How we start treating some of the bullish and bearish PD arrays. Again, I'd really like displacement on the 5 minute. I would like to get above this, because oftentimes you will see the silver bullet, the fair value gap that delivered it. It could provide a second entry, like a little later on. So if I watch us violate this silver bullet, I will be very confident for upside. And, you know, assuming the dollar is dropping. You have this low, high, lower, low, little breaker on the 1 minute. I don't like calling out 1 minute breakers. I've never really found confidence with them. I'm not consistent. I haven't found consistency with calling out 1 minute breakers, so I usually don't. Because you have so much gyration on the 1 minute that you really have to have the narrative. This is the one case where it actually could be, because if you watch any of ICT's breaker videos, what makes a breaker is the context of sweeping liquidity and reacting off of a higher time frame zone, which we have right here. Wish I could there you go. Mean threshold of this wick. And I believe what you have right here, I haven't done too much studying on it, but I believe this is ICT's Reaper. So it's a fair value gap in the breaker structure on the kind of like the back side of it. Let's see. Or we could use the wick. That wouldn't be a bad entry. Again, we're not really trading a silver bullet with that. I guess, I don't know, maybe you could call it, because it'd be like this Reaper fair value gap. I kind of like that as an entry. You'd put your stop below this order block.
Order filled.
Whoa. That was my other platform. But I want to give us a little more confidence, just because, again, we don't have that break and structure, that market structure shift on the 5 minute. So I want a little more confluence. As you can see right here, these two candles, the tops of these two, stopped right at the body of this up close candle. Dollar looks like it could be ready to make a lower low after making a lower high. I wouldn't start to get nervous until we close a body below the mean threshold of this. Again, I saw all this retracement here as like kind of, I was calling out this Reaper. But again, I haven't studied this too well. So this is kind of me live doing that. Dollar looks like it doesn't want to roll over. So again, I'm waiting to see if this mean threshold of this order block is what holds price off. That's what we really want to see, but with a rising dollar, I want that body to get up there. Okay. Not, that was kind of like my line. Remember, I didn't want a body to close below that mean threshold. You could see it reverse. I mean, there is, wiggle room, but now I'm more like wait for more information mode. Especially didn't like that, seeing it come up, react off of that. You can see the dollar still, it just didn't want to roll over. I wouldn't be surprised, it could come and run into this fair value gap one more time. Let's see what we should have been doing. We should have been watching ES at the same time. Again, yeah, so that's why I kind of said I'm going to hold off until we get a lot of displacement in the 5 minute, because I like waiting for 5 minute market structure shifts before doing any type of entry. If we saw like 2 or 3 candles on the 5 minute that were the size of this one, then I would have I wouldn't have needed the market structure shift just because you can see price like running. We could come down, sweep this one more time and go. And this would even be better because look, now we have this 5-minute swing high. So if price on the 1 minute comes down, sweeps this low, and then sends it higher above this high, then we get the market structure shift. So it's another reason why it's always nice to just wait for more data. That didn't help. And if we ran this high, I would count that as a 5-minute breaker. Low, high, lower, low, even if it's just the wicks. But I don't think we're going to turn around as long as the dollar's going higher. We might not get it, but if it turned around, that'd be a really, really nice entry, 3 drives pattern, down to consequent encroachment of the daily fair value gap, reverse out of it, break in market structure on the 5-minute, also a breaker. We might not get it though. And I'm not interested in shorts because, like I said, I think the highest probability, we'd have to get on to the other side of that daily fair value gap. But that, like, so you have to think of it in the context of this. When the day opened up, go to the daily chart. Like, if you're day trading, you have to have daily targets. So this daily fair value gap, after we opened, swept the highs of the previous days, that would have been the target. Now that we've reached that target, it's kind of like, I mean, you might hear me say this on like a Thursday or a Friday. I'll say, we reached our weekly target. So we're not going to do anything because the draw on liquidity isn't, we've reached our target. It could do anything. So I'm saying the same thing just for the daily. We've reached our daily target. And then like weekly target, well, the weekly target was this high right here. You can see our, if you measure out the consequent encroachment of this wick, boom, this white line right here. Interesting. I wonder if, I think where we close today, whether it's below or above this white line, will determine a lot of what I will be expecting tomorrow on a daily candle. I think if we close above it, I'll expect we will be reacting off this daily fair value gap for higher prices. If we close below it and below this daily fair value gap, I think on the weekly time frame, the consequent encroachment held off the body, and I will expecting us to use this daily fair value gap as an inversion. So a lot behind where we closed today. What's today, Thursday? Okay, so we have one more day left in the week. Sad. I usually don't like trading too much into the 3 o'clock hour. So the closer we get to 3 and this move doesn't happen, the less interested I will become in it. And I would have expected it to happen by now. I'll stay on in case I'm proven wrong, but I think I'm losing confidence in it. Again, okay, so I'm gonna want us above this high. And I want it to happen quickly. Because if it doesn't happen quickly, I think we'll just move sideways, kind of, into the close, or maybe just melt down. If it happens quickly, then it'll convince me that it wants to actually take buy side. Yeah, I don't think it's going to happen. Would have happened by now. I think now we're just going to kind of melt or continue moving down. I think if we close our daily candle below this daily fair value gap, I'd be interested to see how the London session prints, and depending on what the London session and how that looks, I would be interested in using it as an inversion tomorrow. Maybe get some, we'll have some equal highs in the London session. Then New York comes, and we'll go sweep that buy side liquidity, tap into this, then send it lower. Assuming we close this daily candle below it. Yeah, another reason why I'm not too convinced it's going to happen anymore is because I would have liked it to show a little more, I guess sensitivity is the word, off of this fair value gap. Not working inside of it. So on the, for example, see how this 5-minute candle closed, came down and then just left it. It was just a wick. So I was hoping that this right here was us just dipping into it one more time, come to consequent encroachment, and I was hoping to see it turn into a wick and then go higher. But when we didn't, do that, and we just continued lower, I started to lose faith in that upside play. I'll probably stay on just to watch the 315 macro, but I'm not really expecting too much. Again, I'm not gonna really engage or get interested until we go above this high for buy side. So yeah. And what I'm doing, what that is right there, is that's creating your own narrative and your own draw and the draw on liquidity in your head. So when you can kind of speak out or think out a scenario before it happens, like it's going to do this, then I will do this, that is what ICT kind of means by narrative, and how it, you have to factor in draw and liquidity, but they're not the same thing. You can know the draw and liquidity and not know the narrative. The most powerful thing is when you can know the narrative, because that's like, the narrative is knowing the draw and liquidity is just knowing what direction. The narrative is knowing why the candles are printing the way they are, and it will also just help you from, like, those are going to be your most high quality trades. Your highest quality trades is when you kind of speak out a narrative and then it happens. Because what you'll notice is your lower quality trades, when you're just kind of entering because you feel like you missed a move, or when you're being reactive. If you're reacting to price, you didn't build a narrative. Like, you might not understand the narrative too well. If you're being proactive, like if you're being reactive to price, it's like, I'm just responding off of what it's doing. But if you predict what it's going to do first, that's not being reactive. That's predicting what it's going to do and understanding what's happening, and then entering because you understand, not because you are reacting. That's the way I view it. And I've always noticed my best trades, and the ones I feel the most confident in, are the ones where I build out the if this then this scenario, and then I see it play out. And then it just helps me from like not taking a trade. Like, there was a time when I'd be like, where am I entering to go short, because it's going short and I need to be in the market. And it's just like, no, I can't really build a solid narrative to the downside. I think we'll probably end up continuing to the downside, but next I can like map out, like this wick and this inefficiency. But this daily fair value gap as a whole was the high probability target for this daily range. So I think anything other than that isn't the highest of probability. So I'm just gonna sit it out. And because there's so much liquidity, like, you don't, like, they could rip it against you if they really wanted to. It's interesting. Yes, you can see this accumulation kind of here, and it's coming up. But again, not much time left in the day. I don't really like taking trades in the 3 o'clock hour. It would have to be like a jaw-dropping push. I'd want to see a jaw-dropping push and then like enter on the first fair value gap. It'd have to be something that like gets to this high in about 4 candles. Okay, I will be logging off. I appreciate you for tuning in. I will do a market recap later today. One thing to note about this close is it's very important to know where we close this daily candle in relationship to the bottom or the mean threshold of this fair value gap.